Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Side hustling is an amazing tool to pay down debt, learn new skills, figure out what you want from your career, and also enjoy many other benefits. While the benefits of side hustling seem magical, side hustle income isn't magical to the IRS. You'll need to pay taxes on this income, including both sides of Social Security and Medicare taxes. That's what we're talking about today on the College Investor Audio Show. Welcome! Let's get started. So as a side hustler, it's important to figure out how to handle taxes for your side hustle, so you don't end up with a tax nightmare on April 14th. Thankfully, handling taxes for your side hustle doesn't need to take much time. Track your income and expenses. The amount you have to pay in taxes really boils down to your side hustle income and also the related expenses. When you track those two very carefully, it will be easy to figure out how much you owe in taxes. Tracking income and expenses can be as simple as writing your income on a piece of paper and storing your receipts in a shoebox. Of course, such rudimentary record keeping will make tax time a little bit difficult. But we got a better idea for you. Here is the ideal setup. For tracking income and expenses, really this minimizes the time and effort spent on keeping records. If you set up your accounts well, you can keep the time spent on side hustle finances to just a few minutes per month. No kidding. So every side hustler will have a slightly different financial system, of course. After several years of experimenting, my ideal side hustle setup involves 3 dedicated accounts just for my side hustle. A checking account at an online bank. All income, including income from PayPal, goes into this account. A rewards credit card. All legitimate side hustle expenses are paid on this credit card or directly from the checking account if I can't pay by card. Money in the checking account pays off this credit card. A savings account attached to the checking account. This account is used for paying taxes. Anytime I earn money from my side hustle, it is immediately contributed to the side hustle checking account. When I have a side hustle expense, I use the business credit card to cover the expense, and then once per month, I pay off the credit card. Then, I transfer about 40% of the profits for the month to the attached savings account. I really haven't found a good way to do this automatically, so I just do it manually. It only takes a few minutes. Once I've set aside money for taxes, I transfer the remaining money, less a few $100s for a buffer, to my personal checking account. That money can then be used as part of my regular spending or for other savings goals. And then each quarter, I make an estimated tax payment. I use around 2/3 of the money from the savings account to pay those taxes. The rest of the money goes into a tax-advantaged retirement account. I also track my income and expenses specifically using Tiller, Tiller, Tiller. However, there's another online account software that could work as well. Most years, TurboTax bundles a 1-year subscription of QuickBooks with its most expensive self-employed tier. Not a bad deal. QuickBooks is pretty awesome. So if you're saying to yourself, "Help! I use my personal checking account for my side hustle. Now what?" Okay, calm down. We'll figure it out. If you're like most new side hustlers, you kind of started earning money first and then figured out that you kind of need a system. So tracking your income and expenses after the fact it's going to be a hassle, but it's possible. The income side of the equation tends to be the easiest. If you are hustling online or working for a few dedicated clients, they'll be sending you a 1099 at the start of the tax year. If you've used PayPal to receive income, you can get reports from PayPal that categorize your business income. I did this for 4 years. Worked great. Expenses can also be fairly easy to track down too at first. Rideshare drivers can use their app to check mileage. Specific purchases, such as a computer, software, or materials, can be tracked through your bank statements or online purchase history. It's just going to be a little time-consuming, but you can do it. And then, once you have your income and expenses sorted out, you can subtract expenses from income to determine your profits to date. Of course, not every side hustler will have a simple financial picture. For example, someone who moonlights as a handyman, a babysitter, or a face painter for children's parties will inevitably have more complex finances. They will have income from many different sources, including cash payments, checks, Venmo, and more, and a variety of expenses. Conducting an income and expenses post-mortem in these circumstances will take more time. When I had to do this a few years ago, I used a tool called Tiller, which exported all my bank transactions to a Google Sheet. With the transactions exported, it's pretty simple to classify the income and expenses correctly. Again, a little time-consuming, but it's possible. You can set aside 35% of your profits for taxes. Side hustlers generally want to go ahead and set aside 35% of their profits for taxes. If you're not a super high income earner, the 35% rate might seem astronomical to you. However, this tax rate is broken into 3 components. 1. Self-employment taxes. The self-employment tax rate is 15.3% of your profits. 12.4% goes towards Social Security and 2.9% goes towards Medicare. If this seems high, that's because it is. When you're self-employed, you are technically both an employer and an employee. That means you have to pay the employer half of Social Security taxes as well as the employee half. Employer, employee. Number 2, federal income tax. So the federal income tax is money you pay the federal government for earned income. There is some debate as to whether you should set aside tax money at your marginal tax rate or your effective tax rate. Since side hustle income is money you earn on top of your typical day job, you'll want to set aside money for this based on your marginal tax rate. Most side hustlers will have a marginal tax rate ranging from 12% to 24%. That means most people will want to set aside about 15 to 20% of each dollar to pay for federal income tax. State income tax. Not every state has one. However, if you live in a state with an income tax, the tax can add anywhere from 0.33% to 13.3% to your tax rate. Hello, California. So after a year or two of side hustling, you may find that the 35% rule of thumb is a little bit too high or maybe too low for you. Adjust it as needed, but just be sure you never go lower than 15.3% of profits. You'll definitely need to pay your self-employment taxes, even if you can avoid most other income tax. The money that you set aside for taxes should be moved to a separate savings account designated for paying taxes. Each quarter, you will want to pay the IRS and your state treasury an estimated payment to cover your side hustle taxes. Use the money in the designated account to cover that payment. What if you say this? Help! I didn't set aside any money for taxes. Don't panic. It's going to be okay. It's not ideal, but it is a solvable problem. Here are the steps we recommend taking if you haven't set aside money for taxes. I've been there. Okay, number 1. Start setting aside 35% of your side hustle income for future tax payments. That way, this is not going to be a problem next year. Number 2, start the process of filling your taxes. Tax software or an accountant can help you figure how much you actually owe this year. First-time side hustlers might be pleasantly surprised to find that they don't even owe the IRS much, if anything. If you're accustomed to getting a tax refund and you haven't earned too much through your side hustle, overpayments and underpayments may actually have canceled each other out. Number 3, move forward with filing your taxes. Don't wait to file because you owe money. It is far better to owe back taxes than it is to delay filing. Number 4, if you owe money, decide the best method to pay your tax debt. People with good credit may qualify to pay their back taxes using a 0% APR credit card. This will transfer the tax debt to a credit card and give you several months, maybe 12 months or more, to pay back the taxes at a 0% rate. If you can't qualify for a low interest rate credit card or loan, just consider the IRS repayment plans. Make quarterly payments on your taxes. So important. Most years, 2020 is the strange exception, self-employed people are required to make estimated tax payments once per quarter. Ideally, you will pay 1/4 of what you owe each quarter. When you file your taxes the following year, you will come away neither owing money nor being owed. Typically, quarterly payments are due on the following schedule. Quarter number 1 due April 15th. Quarter 2 due July 15th. Quarter 3 due September 15th. Quarter 4 due January 15th. If you make the payments late, or you underpay throughout the year, you might have to pay some amount in interest each year. Eek. Now, because of the COVID-19 pandemic, estimated tax dates were altered in 2020. So instead of paying quarter 1 taxes on April 15th, self-employed people had until July 15th to make their first and second quarterly tax payments. Other payments are due as expected. So you might ask, can I lower the amount I owe in side hustle taxes? When you first start side hustling, the tax burden may feel overwhelming. It's especially tough to start paying both sides of the Social Security and Medicare taxes. Yuck. However, there are 2 legitimate methods for lowering your side hustle tax burden. First, you can write off all your legitimate business expenses. And second, you can take advantage of normal tax deductions and credits. So let's talk about writing off business expenses. I often see people commenting that side businesses are a great way to lower your tax burden. Generally, that's not true. Since you're earning more, you will almost certainly pay more in taxes overall. However, side businesses do offer a few opportunities to increase your tax efficiency. You may qualify for certain legitimate tax write-offs that you didn't qualify for prior to owning a business. Any expense that is considered an ordinary part of doing business and an expected expense in a business can be written off. For example, you can probably write off the following expenses: costs of software or apps needed to conduct your business. This includes bookkeeping software and tax filing software in most cases. Tools, equipment, or electronics needed to do your side hustle. Note, computers and other electronic devices have to meet the definition of business equipment laid out by the IRS. Mileage expenses if you drive for your side hustle. Use an app to track your mileage, by the way. Dedicated home office expenses. Any contract labor expenses, including bookkeepers, accountants, virtual assistants, and people you hire on Upwork, etc. Bank or payment processing fees. A portion of your internet or phone expenses, the portion related to business, of course. Educational expenses, including books, conferences, and courses. A portion of your utilities if you maintain a home office. Certain insurance premiums related to your side hustle. Keeping good records will allow you to write off all your business expenses. When you write off an expense, you lower your business profits. That translates to lower self-employment taxes and lower income taxes. Boom, boom. You can also take advantage of some normal tax deductions too. So on top of business write-offs, most side hustlers can benefit from putting money into tax-advantaged retirement accounts. The main self-employed retirement plans include a SEP IRA, a solo 401k, and also a simple IRA. Contributing money to these accounts allows you to defer paying federal income tax on the amount you contribute to the plan, up to certain limits. You won't have to pay taxes on the money in these accounts until you withdraw the money, ideally during retirement. If you have access to retirement plans at work, you may want to consult a tax professional to understand which retirement account makes the most sense for you. Hey, that was fun! I hope that helps too, because I have been in your shoes if you start something and you forget, oh yeah, taxes. Whoops-a-daisy. It's okay. I hope this was a helpful show today. You can also find a ton of resources at thecollegeinvestor.com to help you with your side hustle and also help you earn more money too. Thanks again for stopping by today, and we'll talk to you again real soon.